Good morning, everyone. Trust we are doing good. It's a lovely weather here in Lagos today, and yeah, we've got something amazing prepped up for everyone on the call. I'm your host, Akinwale Chibuike, and today we'll be talking about, or we'll just be discussing together on the call, generally talking about Forex or the financial markets in general, where you can ask me any question at all and we brainstorm together, talk about how to improve ourselves when trading the financial markets. So, like we always do, a quick sound check. If you can hear me properly, drop a message in the chat box. Yes, hello Ibrahim. Hope you're doing good. Good morning, Debbie. How are you doing today? Yes, so we've got just 7 people on the webinar, and would like to get more. So I'd like everybody to do me a favor. Just share the link with your friends on your social media handles so people could actually join us. Morning, Jay. Morning, Ifari Day. How you doing? So I just want you to share the link out with as much people as you can. Let them know that we are live. Okay? Just take a few minutes to do that and done the proper introduction that I would always do, the quick sound check. Everybody can hear me properly. So let's dive right into what we have for today. Like everybody I'm seeing on the call, I know everybody. Every person on this call calls me or texts me on WhatsApp. I know everybody on this call, and I'm actually happy about that. Where we actually talk, and we all know what we do at EGM. We have great products coming for everybody to actually help navigate and make more money from the financial markets, because that is very, very key. Very, very key. We have products coming so everyone can make more money from the financial markets. All you just need to do is stay calm and yeah, be cool. So I think somebody keeps on disconnecting in the webinar. So can anybody tell me the products that we offer at TGM? Anybody at all? Can anybody tell me the products that we offer at TGM? Anybody at all? Can anybody tell me the products that you offer at TGM? Trading in our local currency, that's cloud trade. Let's still chill with the questions or the conversation. We'll kick it up soon, like very, very soon. Zulu trading, brilliant. That's copy trading. Exactly. I'm glad everybody knows the products that we literally offer. Okay, I think somebody's still typing. Good. Now, let me start off with the major thing traders or the mistake traders make. Now, like I always say, it's fine to come to classes. It's fine to attend webinars. It's fine to read books about trading, about your psychology when trading. But what is very, very wrong or not fine at all is when you keep on coming to the classes, reading the books and all, and you're not trading. Okay? Like you're just digesting the theoretical part and you're not doing the practical aspect of it. Okay? You're just doing theory, you're not doing practical. And that is where I want to revolve around first before we dive into the questions and the answer and the conversations and the talking and the fun part. But for now, what do you think, or why do you think it is necessary for you to hop into the practical aspect of trading? Okay, let's start from there. Anybody at all? Because you're coming to classes, you understand these things, you know how it works, but you're not making it work, or you've not put it into practice to see how it works. Like why? Why really? Let me know. Let me know what you think in the chat box. Okay. Let me know what you think in the chat box. Exactly, Sawyer. You're very, very correct. Practice makes perfect. Okay. Practice makes perfect. If you're not putting these things into practice, you'd never become a pro or a master at it. Okay. You're just reading because in a book they say you need to meditate to be able to have the right trading psychology. You know the book says to meditate, but have you ever tried to place a trade then meditate after to maintain your psychology? You've not, and that's the major thing. You need to start hopping on the charts. You need to put your money to the test and understand how it feels to be in the trading space. Okay, you need to put your money yourself to the test and understand how it feels to be in the trading space. Because even if you're demo trading, you're not putting your emotions to the test. Your demo trading, your money is not in alignment with it. It's just a virtual money and nothing to make you scared, nothing for you to get angry about, nothing to test your patience as a trader. All these things I'm saying because of these were the few mistakes I made in the beginning, and I don't want anybody to make it. As I was learning, I was practicing, and that's how I became this very, 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 very type of person I am today. Let's just put it that way. So I hope you did learn a thing or two from all that I said. And you know, to do the right thing, it's very, very crucial. So yeah, let's open the floor to conversations and talking and gisting. But first, what was our last topic? Anybody? Anybody at all? What was our last topic? Anybody? Our last topic. Let's see. Let's know those that are actually taking notes on previous classes. What was our last topic? Morning, Hope. Morning, Teal. How you doing? Morning, Kasim. Morning. Everybody's just coming in after we talked about the juicy part of the class. Good Forex and all. Exactly, the relationships between them. And so far, has anybody applied that to the charts? Have they seen how it worked? Have they seen how it works perfectly or close to perfection? Okay, not yet. I would actually permit that. I know what I would do. What I would do is we'll use our MT4 today. So I show everybody examples of how these things or how it relates to one another. So I'm trying to set up the MT4. Just continue dropping your questions. Drop your questions. Don't worry. I would attend to everything one by one, but I want to show you guys a few tricks I do on the charts. Let's keep on dropping our questions. Okay, how to get the double bottom, double top? Okay, question. Abdulaziz said placing a trade on sell is the issue is facing. Okay, I would explain that. Abdulaziz, Wall Street 30 and GBPSD. I don't really think there's a connection between them. I don't really think there's a connection between them. So let me just share my screen. The aspect that there's no question. Let's do a few technicals with hopes that question would come in as time goes on. Okay. So I want to share my screen. So can everybody see my screen? Can everybody see my screen? Can everybody see my screen? Great. Okay, so this is good right here. So let's delete this. So let's just make gold fill up this area right here. Let's try to get one more chart on here. Let's use ERUSD. Okay, so let me load a template on this one. Okay, so back to the daily time frame. Okay, I'm trying to like get the right settings to put it on. Okay, so can everybody see my screen? Yeah, I decided for us to use the MT4 today. Now, let's look closely. Questions? Okay, Debbie, what it means is per point, hmm, per point, you will make 15 error, per point you lose 15 error. So if you place a trade with 15 error, it means you are using a 15 you are using 15 error as your standard lot size. Okay, that's just what it means. So back to our MT4. Um, let's minimize this. Let's make this full screen. So I want to understand what's happening on gold. That's the major thing. So looking at gold, we have this downtrending structure. Let me just close this gold trade. Okay, close. Now looking at gold, what do we have? We have this downtrending structure. Okay, I want everybody to listen closely because next week there's a tendency I'll do a class on us trading live on the webinar. Okay, like everybody must trade live on the webinar. So let's just listen closely to this. Now, looking at this, we have a downtrend. Let's mark out the downtrend. This is the high. This is the low. This is the high. This is the low. This is the high again. and this is the low. This is the high, and this is a low. This is a high again, and this was another low. Now, are we following? If we're following, drop something in the chat box. If we're following, drop something in the chat box. Okay, great. Now, in a downtrend, what did I say is in a downtrend? Series of lower highs and lower low. Okay, so this is a high, this is a low. Then this is a lower high, lower low, lower high, lower low, lower high, lower low, lower high, low. Then now look at what happened right here. Let's just delete these things right here. Trying to show you guys something here. Now let's look at what happened right here. This was a previous low, right? This was a previous low. Okay. Trying to set this properly. This was a previous low, and this was a previous high. Now look at what happened. Let's zoom in properly. Looking at this area right here, trying to make this super perfect. Now look at what happened right here. You see, price never got to the low. Let me zoom in properly. Look at it right here. Price never got to this low, but price traded above this high, which we had a break in market structure, right? We all agree that this was a break in market structure. So we all agree that this right here was a break in market structure. Do we all agree that that was a break in market structure? Yes or no? Let me just know what you think. Nobody's wrong, okay? Do we all agree that that was a break in market structure? That blue box right here where that red line is good. Now, when we understand that that was a break in market structure, what do we now understand on gold? We understand that gold is no longer in a downtrend, right? It is in an uptrend now, right? Good, good. I'm glad everybody is following. Now that we understand gold is in an uptrend, where do we go and start making our decisions from? We go and start making our decisions from the 4-hour time frame. Now, on the 4-hour time frame, what are we looking out for? It's loading. Waiting for it to load actually. Now, on the 4-hour time frame, okay, good. So let me zoom out a bit. Now, on the 4-hour time frame, what do we look out for? We are looking for market structure again. Okay, we're looking for market structure again. Now, market structure, how? Let us leave that line there. Okay, let's leave that line there. We had this low here. Let me see if I can add one more to this. So we had this low right here. We had this low right here. And we had this high right here. Then we had this low right here. And now we have this high right here. I know you might be wondering, why did I not pick this high? Then say this is a low. Now, The reason I did not pick it is because of I feel or I believe there is a divergence around here. Okay. So how do you know that there's a divergence? You had your what? Your RSI, or you add your MACD, anyone you like, do, or you add volume. There's a way you can use volume to check it also, or you add volume, or you add MACD. Okay, so I'll teach everybody how to use the theory. Okay, I'll teach everybody how to use the theory. So let's start from RSI. Let's start from RSI. Okay, so let's start from RSI. Now, from RSI, what am I looking for? Look at the RSI properly. You'll notice something on the RSI. Look at price. Price created a high, then a higher high here, right? Price created a high, then a higher high here, right? Yes or no? Yes or no? Yes or no? Price created a high, then a higher high. Yes or no? Let me point it out properly. Price created a high, then a higher high. Yes or no? Good. Now, look at the RSI. The RSI created a high, then a lower high, right? A high, then a low. A high, then a low. Do we all agree? Do we all agree that that was what the RSI did? Now, when the RSI does something like that, we call it a bearish divergence. Okay, a bearish divergence. That means price doesn't really align with the oscillator. That means price is already losing what? Momentum. It's already losing steam. Now, what I do in this scenario is, once I understand that there is a divergence, I can now delete this. I can delete the RSI. I'll teach you guys how to use MACD also. I can now delete the RSI and go down to the 1 hour time frame. Now, on the 1 hour time frame, do you see how everything is lining up together? How everything is lining up together? How everything is lining up together. Now I can delete this ellipse right here. Ellipse. Okay. So if I measure on this 1 hour time frame structure, this is a high, this is a low, this is a high, this is a low, this is a high, and this is a low. Look at what happened right here. Can you say that this is a break in market structure? Can we all agree that this was a break in market structure? Can we all agree that this was a break in market structure? Like the way price broke through this and came back to the retest. Can we all agree that it's a break in market structure? I'd like to get a response. I'd like to get a lot of response. Okay. Tosin, why did you say not yet? Or why do you think it is not yet a break in market structure? Okay, because you think. Okay, you think. Okay, no problem. Now, Tosin, if you go to the 15 minutes time frame and you go and look out for this structure or this price action on the 15 minutes time frame. So let's go to the 15 minutes time frame together, Tosin. Now, do you believe this is a break in market structure on the 15 minutes time frame? Tosin, look at the 15 minutes time frame. Do you now believe that it's a break in market structure? Brilliant. Now, this is where the concept of, since we've been doing this since morning, we've been doing multi-time frame analysis. That is why sometimes you need to go down to lower time frame to understand price and the actions price is taking. Okay. Now that you have agreed with me that it's a break in market structure, I can go back to the 1 hour time frame I was on before and look for sell opportunities. Now, if I'm looking for sell opportunities, I'm not looking for sell opportunities to hold long term. I'm looking for sell opportunities to hold short term. Okay. Now, if I look for sell opportunities, possibly it is to come back to this area right here. This area right here, because this was where there was imbalance in price. Okay. Because if you look at this right here, this is a fair value gap, an area of imbalance in price. Okay. This blue box right here, there was imbalance in price. So I believe price could actually do this. to trade back down below into this area before we now see it go back up. But remember, all we are doing in financial markets is based on probabilities. We need the financial markets to prove us right, okay? So I can literally take his sell, but I'm still waiting. Why? I want to teach everybody how to use the volume. Now, look at the volume. We are going to volume now. Look at the volume. How can I use the volume to know if there is a what divergence? Look at this right here. Right here. Price created a high, right? Look at what happened to volume. Volume was increased, right? There was an increase in volume. Do we all believe that there was an increase in volume right here? Like volume was increased. Are we all following? Can we all agree? Or do we, like it's seen clearly on this chart, there was increase in volume, price moved higher, right? There was much volume, price had to trade higher, right? Now, look at this area right here. There was a reduction or there was reduced volume, but price still traded higher. What does this mean? This means that it was just a what? An impulsive move, okay? Just an impulsive move to the upside. Now I can now understand properly that, okay, this was what? A divergence. Price traded higher, volume increased at a point, but reduced at another point. Just regular Wyckoff schematics. Now I can take a sell. Taking a sell, I already took a sell. I think the sell already placed. Okay, yeah, I took a sell and I can now double tap on it and set my stop loss and my take profit. Okay, always use your stop loss and take profit. So on MT4 on PC, you don't need to actually use your what is it called? Your to start typing in the value. You could just drag this and you see how much you'll be losing. So I'm willing to lose like $20 on this trade. So I put my take profit above this or just like, okay, let's wait first. I can put my take profit. Let me just set my take profit first. My take profit is at the top of this imbalance. That's $58 take profit. Then my stop loss, I want to set it on the 15 minutes time frame. I need to go back to this area right here. And where is the last high on the 15 minutes time frame? Right here. I can set my stop loss to this as $10. $10 stop loss to roughly $60 take profit. That's like a 1-to-6 risk to reward ratio just on one trade. Like I'm making 6% of my trading account just on one trade, just on one single trade. Do you see how easy it is to analyze the financial markets now? Like how easy it is to analyze the financial market and see the trade we entered, it's already running in profits. Already in profits. And you can see I'm using a real account. If you look upright to the left hand side, you'd see it's a real account. And that's just how to analyze. You see, it's very simple and straightforward. You don't need to just understand what price is doing, understand what it is doing, the details it carries. And you see also the divergence already crossed the histogram. What's this telling you? This is telling you that there's a tendency for price to come down. And also look at the divergence. High, low, price, high, high. If I draw a line right here, it shows the divergence. Already in like $2 profit. It's very, very easy. It's very, very easy to understand how price moves, how it works. Okay, this is my trade entry price, like right here. This blue box, you see this green line right here, this green line, this floating green line. That is where my entry was. You see right here, this is where my entry was. Okay, you would like me to explain again? Okay, we'll explain again. Let's take it from the daily time frame where we started from. So we started from the daily time frame. Okay, we said we wanted to understand how price moved or how it worked on the daily time frame. So we said price was generally in a downtrend. Okay, this is a high and this is a low. This is a lower high, this is a lower low. Lower high, lower low. Lower high, lower low. Lower high, but low. So we now zoomed in to understand this piece of price action better. And what we saw was we had this low, we had this high. Price never traded into the low, but what happened? Price traded above and broke structure on this high. Okay? When we understood that price broke structure on this high, we said we both agreed that we were now in a what? An uptrend. Okay? Now we went to the 4-hour time frame. You can see the way price is. And from the looks of it on the 4-hour time frame, we saw that we had a high and we had a low and a high. Then we had a higher low, and we said this is a higher high. That there is tendencies for a divergence to have formed here because of I didn't like the way price was structured. Yeah, so I said there was tendencies for divergence to have formed, and we added our RSI, added our volume, added our MACD, and we saw that okay, price actually formed a bearish divergence. Bearish divergence means opportunities to sell in a bull market. Okay, we're in a bull market. Fine, I know selling in the bull market is something very, very risky, but since all tendencies aligned together with it that we could take a sell. That was why I agreed in taking a sell order on gold. So we now went to the 1-hour time frame, and we also agreed on the 1-hour time frame that what we broke structure, mini structure. Okay, we agreed on the 1-hour time frame that we broke mini structure, and we now went to the 15 minutes time frame when Tosin argued that that was not a break in structure. We went to the 15 minutes time frame, and we now agreed that that was a break in market structure. Then if I come back to the 1-hour time frame and I'm trying to prove more points, you would see that this was a rising wedge. Okay, you would see that this was a rising wedge. Okay, you see that this was a rising wedge, and what that's broken to the downside, that's retested, and we expect more push to the downside. Target is always below the rising wedge, so relatively my target is in alignment with it. We all understand. We all understand now. We all understand how I now arrived at a sell thought on XAU USD. If you do understand, just type a yes in the chat box, and if you don't, let me know so I can break it down again. So somebody should give us a pair to analyze so we can place another trade on. Since there are no questions, let's just use this as a technical analysis class since nobody's asking questions about the financial markets. You see how easy it is to make money from the financial markets. Simple and straightforward. We'll do more of this next week, like more of technical analysis and hopping on the charts. Okay, the term rising wedge is a chart pattern where in an uptrend, we see price rise slowly in a slope before breaking out and trading against its direction. So we have a rising wedge and a falling wedge. A falling wedge is just the opposite of a rising wedge. Okay, divergence. Wow, we'll create a topic on divergence. Okay, divergence is just like a signal to tell you that there is a possible reversal in trend. Everybody wants to. Okay, any other person? I just want us to analyze Wall Street US 30. Morning, Kelechi. I reached out to you, but your number wasn't going through. That's Dow Jones. Okay, Dow Jones, Dow Jones, Dow Jones. Let's analyze Dow Jones. So, same concept from the daily time frame. Now, wow, the Dow is really in a major uptrend, like a major uptrend. Okay, so what do I see on the daily time frame? I understand that on the daily time frame, I'm not really willing to go back far in time. So let's just say we look at price action from this area right here, early January till now. Okay, so on the Dow, what do we have? We can see market structure is bullish. Okay, we had a high right here and a low right here. We had a high right here and a low right here. Now you'll be wondering, why do I color my highs and low? I just want to like give myself a visual or a pictorial of what I'm looking at literally. Okay, so we have a high right here, we have a low right here. Then we are currently at the highest point. Now, if we look back, there is no structure back, like there is no other structure at the back. So there is no reason or there is no thoughts on why to sell. Okay, most people will be looking to sell the Dow or something, but there is nothing that supports itself from previous price action. Okay, there's nothing that supports itself. And right here we have a what? Right here we have a previous impulsive candle, a bearish candle in an uptrend. We had a what? An order block right there, a bullish order block right there. So common sense would literally tell me that I shouldn't be looking for sales in the bull market. That's the first thing. Okay. Understanding we have an order block and price traded into it yesterday, or sorry, day before yesterday, before trading away from it yesterday. Okay, I can take off this right here. And I just understand this is a break in market structure right here. This is another mini break in market structure. Because that was a high right there. This was another high right here. Break a market structure that price traded back into. Now this is a high right here. The high, this high above right here, everybody's looking at it as resistance. But remember, we are in a bull market. Okay, resistance will fail in the bull market, and what support will work in the bull market. Okay, so if we understand, or that the fact that we understand resistance will fail in the bull market, we should not be, we shouldn't even have the thoughts of thinking to look out for selling opportunities. Only if there is something fundamentally that supports the fact that we have to look for sales. Okay, and now let's look at the 4-hour time frame properly. Let me just object list. Let me delete all the objects right here. Now, from what we saw on the 4-hour time frame, or from what we can see on the 4-hour time frame now, let's deal with this piece of price action right here. Now, we would consider this, or would you consider this with me, that this is a break of market structure? Do you agree with me that this is a BMS, a break in market structure, or a break of market structure? Would you agree with me that this market structure broke on the 4-hour time frame, retested and went bearish? Do you agree with me? Okay, I would analyze ERUSD Okay, now that we are agreed that this is a break in market structure, this is a high, this is a low, this is a lower high. Okay, let me just mark it out. So we can say that this is a high right here. I think the two actually ran away. Okay, so let me mark that out again. So we said this is a high and this is a low. Okay, and we said this is a lower high and this is a lower low right here. Then this is a what? A lower high right here. Do we all agree to that? Do we all agree to that? So why I just marked that? That was a high, that was a low, then that was a lower high, that was a lower low, then that was a lower high again. Do we all agree to that? We're trying to understand what the 4-hour time frame has to offer us. Okay. Now that we agreed to it, let's go back to our MT4. Let's see if I could just delete this. Okay, so I can now mark this out. This was a previous low. Okay, we could mark that out and say that was a previous low. That was our previous low. And we could mark this high, that was our previous lower high. Trying to make it 100% perfect, actually. Okay, good. Gold is actually in $3 profit right now. I'm checking from my mobile phone, actually. Okay, $3 profit. That's actually something very, very good. Okay, so I can now go back to the 4-hour time, sorry, to the 1-hour time frame now. Since we have to go very, very in depth to lower time frames on this one right here. Now, what do we have right here? On the 1-hour time frame, we can see this was actually all I said it was. It's actually everything I said. So I can delete this one right here. So I can delete this one right there and look at this properly now. So what can we see here? We can see this was low, high. Market structure broke here, but we retraced back into this area. Why did we retrace back into this area? It was simple. There was liquidity sitting down below here. We had to grab it. We grabbed it and we traded away with massive momentum. Okay, massive momentum. Now, looking at what the Dow has now, what does the Dow has? We see it's traded away with massive momentum, and we can see price action is very, very choppy right here, right? Now I'm looking for confluences. I want to add my volumes. Now I just use the volumes to understand price. Okay, what is going on in price? What's literally happening? And we can see there was increased volume right here around this area right here. There was increased volume, but volume is reduced now. And there is no volume, there is no momentum, which means there is a tendency that price might want to trade lower. Now, why do I believe price might want to trade lower? Price traded away from this area with full momentum, and what it left an imbalance right here. Okay, price didn't trade efficiently. It just went away and traded inefficiently. So this was an imbalance. Okay, this was an imbalance, but I need more reason to sell. I can't just click a sell right now. Okay, so looking at this right here, this is like a chart pattern. That's like a triangle right there. Okay, that's like a triangle right there. So triangles, or that's a symmetrical triangle. Now, a symmetrical triangle in the financial market is a type of chart pattern that can either break to the upside, break out to either the upside or the downside. It depends where it wants to break out to. So I can delete that, and also I can delete the triangle. I just need to understand that I have a picture of the symmetrical triangle in my head up there. Now, where I just marked out is a lower high, okay? A lower high, but I'm not okay with that lower high. And if I would be looking for opportunity to sell the Dow, I need to see price break. Price would need to do this for me. Break, then retest before trading back down below into this area right here. This is what I'm expecting on the Dow. But I still can't really quickly make that decision. I need to go down to a lower time frame. I don't really use the 30 minutes. I use the 15 minutes. So I just keep the 30 minutes and go down to the 15 minutes. So on the 15 minutes time frame now, I want to see some things on the chart. What do I want to majorly see on the chart? I want to see that truly there was an imbalance in price that I was not happy about. And let's see what our volume has to say. So looking at the volume right here, we saw that there was an increase in volume here, right here, and there was a decrease in volume. But what price traded higher, but traded higher here. So I can do this. I can now understand that there was a bearish divergence right there. Volume doesn't align with price. Volume doesn't really align with price. So what I might be looking for now is this is a tendency that price will trade lower. Okay, price will trade lower. I understand there's an imbalance. I can delete it and what? I measure all my expectations on this order block down below here. Why do I measure all my expectations on this order block down below here? I measure all my expectations on that order block down below because of that is a POI, okay? That's a POI. What do I mean by a POI? That's my point of interest, okay? Point of interest, or an AOI, area of interest, okay? That's an area of interest where I'm looking at in the financial markets. So what do I think price might do? Okay, I think price might want to do a few things. It might first like to trade above this red line. Okay, might first like to create a wick above this red line for those that set buy stop order there before coming down to trade below, and it might even trade below this order block. Okay, just my thoughts and my perspective. Okay, don't go and say you will place the trade because of the financial analyst said he will be looking to take that trade, because what this is a clean low right here. This is a clean low right there. So I feel price might want to trade below this clean low, and that means below the order block. So either ways, price might still decide to come into this area before we now buy, but still, it all comes down to how price wants to behave. But I hope you understand the reason. If I take a sell on this, I hope you understand the reason I'm selling. And if I also buy, the reason is because of price doesn't just form a accumulation here and is looking to distribute, because this is an accumulation, distribution, reaccumulation. If it decides to go up, it's a redistribution. Okay, so that's just the reason why if I sell, I'll be taking a sell, and if I buy, I'll be looking for a buy. Accumulation, distribution, reaccumulation, redistribution. Okay, so that's just it. Do we all understand? So literally the only, okay, we have one more person that says we should check ERUSD. Okay, I will check ERUSD. You've got nothing to worry about. I'll check ERUSD. Do we all understand all that has been said? Do we all understand? So we're in $3.76 profit. That's one of the magics of placing or trading in the financial market. It's like you're making free money. Just know why you're placing that trade and you should be good to go. Okay, so let's go to ERUSD. As said, let me add my volume because I'll be needing it. Okay, so let's just reduce space it's taking. So on the daily time frame, sorry, okay. So on the daily time frame, let's see. On the daily time frame, you can all agree with me that this was a major uptrend. Okay, do we all agree that this was a major uptrend? This was a major uptrend. Do we all agree that this was a major uptrend? Yes or no? Do you all agree that that was a major uptrend? Good. Okay, now I want to understand this piece of price action here and this piece of price action here so I can zoom in properly. Good. So this piece of price action to this piece of price action here, let's dive into it. So firstly, this is a low, this is a high. Okay, this is a low and this is a high. This is a low and this is a high. This is a low and this is a high. Okay, now if we consider or we say where is the most recent low in this piece of price action, we'll be saying it is this area, right? We'll be saying it is this area right here. So I could just delete everything that it's on my chart. And just, this was the last significant area, okay? The last significant area. And what? Market structure broke, right? Market structure broke, created a low right here. We also broke this one. Trying to actually make this very, very, okay. Let's just say market structure broke right here. We just understood that market structure broke right here. And also market structure broke right here. We just want to understand how price moved, okay, how price moved. And right here, okay, so we were generally in a downtrend here until this happened. So what really happened is we're all just trying to understand price and its actions. So this is a high, this is a low, this is a high again, and this is a low. This is a clean high. I consider it as a high also, but I'm considering it as a clean high, and this is a low right here. Okay, now dollar is falling. Sorry, gold is falling because of gold is weak. We are on a sell on gold. Okay, but that's for short term, not long term. Gold is actually in $4.84 profit right now. Okay, $4.84 profit right now. Okay, $5.18 profit right now. Okay, so we are generally in a downtrend from what we see here, but this is a clean high. Liquidity was sitting right here. liquidity was right here. And what happened? We've purged liquidity right here. We were supposed to reverse at this order block right here, or at this area of resistance. Let's just say area of resistance for everybody that doesn't understand what an order block is. But we are still seeing price push higher. Why? That's the question. Why is price pushing higher? Very simple, because there's an imbalance right here in price. There's inefficiency in price right here. The same thing we saw on gold while gold was pushing lower. This was why. Because of this. This is why it is still pushing higher. It wants to trade into this area before coming back down lower. My own thoughts. So what do? We can now delete all the markouts that we have. I really don't like leaving markouts on my charts though. That's just the type of person I am. Then we major on this piece of price action here. So we go to the 4-hour time frame. On the 4-hour time frame, we had a low, a high, a low, a high, a low, a high, a low, a high. Okay. Now, understanding that we had this series of low and this high and this low and this high right here, then the lows right here, then this one right here, and this one right here, then this one right here. Where do we think price is going to? That's the first thing. You need to understand we are in an uptrend. So we need to understand where is price going to. Now, let's look at the volume in this instance. The volume is what? Normal. There's no changes in volume at all. Like no changes in volume at all. Unless we want to consider this and this right here. So if we consider this should be around this structure right here, this right here, and this. We have a divergence right there. So let's just quickly we have this piece of divergence right here. Okay. And right here. Okay. So we see it aligns, but I can't just sell because of I want to sell. Remember, gold is falling. That means dollar will gain strength. That means EURUSD will sell for short term. That's just the short term bias. Okay. We still have this low, which was the last area of structure, and we still have this high, which was the previous area of structure. So, reason for me to sell. There's imbalance here. It needs to fill. So, we need to wait for this fill of imbalance and see if structure breaks before we look for selling opportunities. So, I believe EURUSD might sell for a while if we go down to the 1-hour time frame to streamline everything we say in this chart later. I'm done using the what's it called? The volume. Okay, so this is last area of structure. We need this one for it to break. We can actually consider it as a break in market structure. But if I want to actually force things to work, and I'm trying to place this trade from the 1-hour time frame, I can gladly say that there was already a break in market structure right here. Okay, There's already a BMS right here, breaking market structure right there. I'm trying to like force something to work. I can say there's a breaking market structure right here. Price traded higher to what? Clear liquidity right here. And this is a what? An order block right there that it traded into. That means this will be my target, not the one on the 4 hour anymore, not any of this area right here, but this area will be my short-term target for the sell. Okay. So now with that known, I need to now determine if I'll be taking the sell or not. We are still general bias on the daily time frame is short. Okay, that means the general bias on daily time frame is still a major downside. Okay, but short term, I want to major on this sell right here. The general direction is bearish on daily time frame. On the 4 hour, we have a bullish structure. On the what's it called? On the um on the 1 hour also we have a bullish structure. But now on the 1 hour, we see a break in mini structure. So do I really want to take this sell, or I want to leave it alone? I'm already selling gold, which means dollar is gaining strength. If I sell EURUSD also, it means dollar is gaining strength also. What do I really want to do? I need to decide. Now, my decision, I want to go and check the M15, the 15 minutes time frame. To actually find my decision for wanting to take a sell. Okay? Now we have an inverse head and shoulder, left shoulder, head, right shoulder. But I feel this is just a trap because what we've cleared liquidity above right here. So I might be looking to take a sell, but I'll be risking less on this because why would I be risking less on this? I will streamline my order block to this area right here, the 15 minutes area. So if I'll be taking a sell, I'll be using a 0.10 lot size sell. I've placed the sell. I now want to set my stop loss. My stop loss will be very, very tight. I could risk just $10 on this at previous high. Then my take profit will just be below this clean lows right here. So I won't be using the 4 hours or the 1 hour take profit area anymore. I'll be using the one on the 1 hour. Okay, right here, this clean lows right here. So all I need to do is just wait. If price hits my stop loss, fine. I still have gold running, so gold would cover for it. And if it hits my take profit, fine also. That's just the major reason behind me taking a sell on EURUSD. So let me just open my terminal, view terminal, and you can see this is my running trade. Gold $8. EURUSD I just opened now -$4. That's because I used a big lot size. Don't try it at home, please. Only risk what you can afford to lose when trading. Okay. Don't say because of somebody is using one big lot size, you want to use the same also. Please risk only what you can afford to lose. So do we all understand the reason why I'm taking a sell on EURUSD and why I took a sell also on gold? I just stopped sharing and we can all understand or follow along with the trades. Okay. So do we all understand? Yes or no? Do we all understand? Yes or no? Good. So what I'm literally driving at is understand structure, understand price, understand multiple time frame analysis, because it's very, very key. Understand how price drops down from the daily to the 4 hour to the 1 hour, and least you should check is the 15 minutes so you don't complicate things for yourself. So that's just it. And Since it's an AMA session, I'm still available to take questions. If you have any questions at all, please continue asking them. I'm open to take questions. Okay, I'm still open to take questions. So continue asking your questions, please. Okay, so please ask questions. Any question, drop your questions in the question sections. Yes, I will do a webinar on that soon, very soon. I'll do a webinar on that very, very soon. Okay, there's a class on that we did previously, like just explaining these things basically. Explaining these things basically. Could you just share little points on how to use the paper leverage and how to use? Okay, if you are given a leverage of 1 to 200, that means if you have $10, you can control $10 times 200. Okay, that's $2,000. You should use a lot size of 0.01. Never try to use a lot size of more than 0.01. What's the relationship between CCI and RSI? I only use RSI. I know RSI is relative strength index. I don't use CCI. For my analysis, when I want to analyze, I use moving averages, volume, I use MACD, I use RSI. It just depends which one of them I feel like using when I just want to use them. Okay. Anyone I feel I should just use, or anyone I feel it's the right time for me to use, I use it. Okay. So that's just the major thing. Break even. Break even means if your trade is going against you, but comes back to your entry point, or is going in alignment to what you said, but comes back to your entry point and you close your trade, that is what is termed as a break even. Okay. When we talk about what was that? What did you make mention of now? When we talk about false movement just means like a trap in the market where price moves against you, and well, when price breaks out and immediately it returns back into the area it's supposed to move and you traded against it. Correction is just after an impulse move, there is a corrective move against, that's a move against the trend direction. So that's literally what it is. Um, I use the I use the EMA and SMA together. I use the 8 SMA and the 18 EMA. Okay. Now, candlesticks actually tell me a story in price. That's what they do. They tell me a story in price. That's why I feel like using candlesticks is better because I'm able to understand price better. That's why, literally. Risk management is how you manage your risk. That's just simply what it is. Now, in the financial markets, is full or filled with risk. Okay. Everything we do in the financial market is risky. Very, very, very risky. So how do you manage your risk? How you manage your risk is knowing the right lot size to use, the right entry point, the right exit point, the right take profits and all. That's just what revolves around risk management. We did a class previously on risk management. It's on our YouTube channel. Go and check it, Tosin. Okay. ROI means return on investment. If you give a trader $100 when you're copying his trade, the ROI is how much you make from all the trade you copy from him. That's what ROI in copy trading means. You're welcome, Tosin. You're welcome. Any further questions? Okay. Okay, but in my analysis, you didn't consider candlesticks behavior. I considered candlestick behavior every single time I was analyzing. When I was talking about the higher highs and higher lows, how price formed, how we broke structure, I was considering candlestick behavior. Those were not chart patterns. BMS is candlestick behavior, not chart patterns. Okay. They were all chart patterns are candlestick behavior. They all still fall down onto candlestick behavior. I can explain now. I don't use indicators to place entries. I only use them to understand price better. I will never use indicators to place entry. I use price action for entries. Money you allocated is return plus more money. Just take it that way. Yeah, using moving averages helps you understand price direction. But remember, these indicators are based on what price has done previously. So they can't tell you what price will do. They only give you more confluence on what currently price is doing. Okay. Okay, Dick, what I literally said was it helps you understand price direction. Okay, I use the two together if I want, and sometimes I don't use the two together if I don't want. Okay, it just helps you understand current price, where current price is heading. You can't tell you what price you do in the future. It's just helping you understand current environment of price. Ah, I'm not really of a hedger because I really don't like it. I prefer using a stop loss. I prefer using a stop loss. It's better for me to get stopped out than hedging. That's just why I think. Why I think my thoughts. It's better for me to use a stop loss or break even on my trade by moving my stop loss to my entry price than hedge. That's just it. Any further question? Any further questions? Okay. In the absence of no questions again, I'm talking about technical analysis in depthly. We would call it a day. We'll meet you guys on Tuesday's webinar that will be holding next week Tuesday. We've got a huge load of topics for you, a truckload of topics actually for everyone next week. And yeah, I hope it is as exciting, fun, and also lively as the one we had today. Even though the numbers were small, but I'm glad everybody was following and they learned a lot. So yeah, thank you very, very much for joining me on today's webinar. See you next week, Tuesday. Bye-bye.